Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, July 20th. Well, the S&P 500 is trading slightly higher so far today as Microsoft's robust results helped to offset escalating tariff worries after President Donald Trump said he was ready to impose levies on $500 billion worth of goods from China. And on that note, let's move on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR. This is the exchange-traded fund that closely follows our benchmark index. And as you all know, the SPY made an all-time closing high on January 26th. Of $286.58. We also know that it fell from there down to the 200-day moving average, the black line, and then took about the rest of the year up until now to walk back up this 200-day moving average and gain a little momentum to where it is now. When I captured this chart today, the SPY was trading at $280.11, about 2080 about on the S&P 500 itself, and we're in a good place here, at least at the moment. Currently, the SPY is trading in an uptrend, trading nicely above the 200-day, the black line, the 50-day, the green line, and the 20-day moving average, the red line on this chart, trading nicely above those lines. Now, we can see that the SPY is forming another triangle here, and the good news is that the SPY has broken above this upper channel line that you can see I drew along here over these tops. It's touched three places. That's a good thing. And we see now that the SPY is actually broken above this channel line again and is now trading on top of it at about $280 or about $2,800 on the S&P 500 itself. Now, nearby price support sits at the 50-day, well, the 22, but stronger support potentially at the 50-day moving average at $274.90. Then we have this lower trend line coming in, a key line as it's touching three places, and it's coming into 273 right here. So we have all kinds of potential support here should the SPY find a reason to fall. Now, in the coming move, we'll see if the SPY can hold on to its current price level. If we look at the RSI down here, we see it is trundling along just underneath its overbought line here, although we are up in overbought territory. Wouldn't surprise me if we pulled back a little bit here, but in earnings season, anything can happen. So we'll have to see what happens next week. A lot of companies. Next week is extremely important with hundreds and hundreds of companies announcing earnings, and of course many of them will affect the SPY could affect it pretty dramatically. We also have the MACD here in a good place, trading above the zero line, both the signal line and the MACD line, so that's a good thing. So once again, in the coming week, we'll see if this benchmark index can hold on to its current price level and hold above the 280 line as we move through second quarter earnings season. Of course, if that happens, it would be bullish. If not, we will see if it does have to pull back a little bit here, we'll see if it can remain in its current uptrend by staying above the $274 level. Okay, and for our next chart here, we're going to look at a daily chart of the PowerShares QQQ. As you all know, this is an ETF that represents the NASDAQ 100, important index. And as we can see that the moves, the major components in the QQQ are the big dudes, the big tech dudes, Amazon, Microsoft, Intel, Apple, Google, Facebook, Netflix, that whole group. And of course, it did help yesterday. It helped the Qs that Microsoft announced such fantastic earnings. And as we see right now, when I captured this chart, the QQQ was trading at $179.30. Now the Qs made an all-time closing, new all-time closing high on July 17th, a couple of days ago, at $180.27. And when I captured this chart today, the Qs were trading just within kissing distance of that at $179.30. Like the SPY, the QQQ is trading in an uptrend, but it's certainly outperforming the SPY in that it is still creating a series of new all-time highs, while the SPY is still below its January high. So the tech stocks, we can really say, are outperforming here. We can see the 50-day moving average here coming in at 173.61. Again, we can see the nice uptrend that Qs are in, and actually the 50-day moving average is helping to draw this trend line here. So that's why I believe that the 50-day could offer reasonable support should the Qs fall back into this line. So again, like the SPY, in the coming week, we'll see as we move through second quarter earnings season if the Qs can continue to make new all-time highs on the backs of earnings from more FANG stocks. Stay tuned. Our final chart today is one we haven't looked at in a long time. Sometimes I like to stay a little incognito in earnings season. I like to be in a stock or an ETF that doesn't get in the way of negative earnings from some of the big companies. And this one is a little more mild-mannered, and actually it's populated with many, a great number of its components are in the mid caps, so they're not the stocks in the spotlight, which sometimes is a good thing. We're looking right now at the Invesco Water Resources ETF. It tracks the performance of U.S. exchange-listed companies that create products designed to conserve and purify water for homes, businesses, and industries. Top components include Danaher Corporation, Roper Technologies, Waters Corporation, Ecolab, Xylem, and HD Supply. I looked at several indexes for water resources. They're all very positive. This is the best looking one. The PHO is the symbol here, and as when I captured this chart, it was trading at $31.20. As you can see, back in January, it followed the SPY lower, down to its 200-day moving average, just like the SPY did. And then the PHO slowly lumbered higher. It traded in a range, but it kept making new higher lows. And then when we encountered that pullback in June, it did fall with that pullback when the whole market pulled back in June. But the PHO did not stay below its 200-day moving average very long. It bounced right back up, which I like. And it's moved up from there. It's now coming in again at $31.20, and it moved back up above its 50-day moving average, which is now coming in at $30.66. Now, if the PHO continues to remain positive in the coming week, I will possibly buy shares of it for my portfolio, with an initial protective stop being a close below the 50-day moving average, which is again coming in at $30.66. Of course, then if it continues higher, I will trail my stop higher from then. So you might want to keep a watch on the PHO in the coming week. I think water is going to maybe at some point here come into its own as a very important commodity. And now for the coming week's economic reports. But first, I want to alert you to an exciting opportunity. This is the perfect time to check out my online training, How to Bottom Fish Like a Pro. We are offering this training right now at a 20% discount. And I say this is the perfect time because the June dip in the market beat down a flurry of high-quality stocks, and now they're ripe for the picking. With this training, you will discover quickly and easily how to spot the stocks that have sold off and are ready to reverse higher. potentially giving you profits of 20, 30, 40, 50% or more. So check out this offer by clicking the button below. For the next week's economic reports, on Monday we have existing home sales. Not much economic-wise going on Tuesday. Wednesday we have new home sales and our usual crude inventories. Thursday we have durable orders, our usual jobless claims, and our usual natural gas inventories. On Friday we have the GDP and the Michigan sentiment numbers. Again, you're going to want to check out How to Bottom Fish Like a Pro. Our special 20% discount is available now for a limited time only. Learn how to buy low and sell high, a simple and effective approach to the market that can make your trades more profitable from now on. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.